well-known nationally as financial planner on radio shows. He has his own radio show. He's guest speaker on radio shows. He wrote periodicals. He's done large accounts for large institutions like Wente Wineries, Oakland A's, San Francisco Giants, just a few big names. But totally cares that people totally understand their future and what life looks like. Not 5 years ago, but 5 years from now, 10 years from now. Income for life, things like that. So I'm going to let Lance take over here, and I appreciate you being here. We're filming this for national training. Welcome, Lance Mays.
Thank you for taking time out of your day to come and spend it with us and try to educate yourself a little bit in a new and different arena. The purpose of this is, again, to try to educate a lot of different segments of the population, and this will be used in other training classes across the U.S. as well. But how many times have you heard the old line, house rich, cash poor? A lot of people have. Unfortunately, now is house poor as well, a lot of people, right? So there's a lot of changes that have happened in the world today. It is a world that has gone upside down. And what we're trying to do is educate people in being able to take advantage of the laws the way they are written for the benefit of our clients, not the expense of. Ways for them to be able to start being a little more proactive in their retirement, being a little more proactive in making sure that they have the kind of lifestyle they want, that they want their golden years to be golden instead of tarnished. And that's a little bit about what this segment we're going to chat about today is one of the tools that is out there for so many people, which is their home. It's a largely appreciated asset in most cases. But then again, 45% of the people that retire nowadays still have a mortgage on their home. And if you're on a fixed income, and you're going to be living longer than ever before, which is the reality in the world, isn't it? Right now, there's over 1.2 million people in the United States over the age of 100. Every morning, when you watch Good Morning America, you see Willard Scott on there, and the Smucker's parade of seniors. That list gets longer and longer and longer, year after year after year. What a lot of people aren't realizing is that if we started work seriously between the ages of 25 and 30, and then really started our career at age 30, and we plan, or other people have planned to retire at age 65, if we're going to live to 80, 85, 90, 95 or more years, we literally could be in retirement as long as we actually worked. And what are we going to do to make sure we have the income to provide the kind of lifestyle that we want when we choose to retire? So, American Senior Funding is a company that I'm associated with here. We've been specializing in senior solutions for over 10 years. The Northern California branch is right here we are. And again, thank you for coming. You're welcome to pop by any time. We have been doing financial planning, the company overall, since 1990. I myself have been individual financial planner for over 25 years in a lot of different areas. Everything from qualified to non-qualified, to structured programs, to corporate programs, to individual programs for pre- and post-retirement. So needless to say, we've got a lot of experience in this area in all areas. But for reverse mortgages, we started this company in 2003. So again, this is our 6th year. We've completed over 1,600 reverse mortgages in California alone. That's a lot. Do you agree? So a little bit of experience there as well. We're licensed and bonded in over 19 states. And the main office for American Senior Funding is located in Mission Valley, California. Now, the principals were all FHA approved lenders. The members of the National Reverse Mortgage Association, accredited business, the supervising brokers are members, of course, the National Ethics Bureau and senior market professionals, and most of them are also members of certified senior advisors. So focused to be senior friendly, making sure that seniors understand the options that are available to them to be able to have the kind of golden years they want. First question, though, is, ladies and gentlemen, is the reverse mortgage right for you? I don't know. But at least we're here to try to educate you a little bit and help you understand some of the realities of what it possibly could do for some people. And we're going to cover a couple of different things as we go along. But when you consider it, these are the things you should know. Most of us wish to be able to reach retirement, have a comfortable life, be able to play golf or garden or go visit the grandkids and whatever. So what is it, what most people really want? In retirement, we usually want some sort of security, knowing that we're going to be able to have the kind of lifestyle we want. Is that correct? And being comfortable would be important too. Comfortable with the amount of money that's coming in, and comfortable to make sure that you know you're going to be able to have the nutritional needs and medical needs met. And the other concern that a lot of seniors I've talked with over the years is, they don't want to be a burden to the family. No one grows old and says, you know what, I want to move in with the kids, I want them to take care of me and feed me and do everything and support me when I get older. Now, the older days, that's kind of the commonplace thing, but nowadays, that's not really the thing that most people want to do. They want to have independence and live on their own and not be a burden to anybody. So independence is a key factor for seniors. In a survey nationwide, independence and being able to live under their own terms was one of the #1 answers. Desire to stay in their own home. Nobody, again, grows up wanting to go to a nursing home or a care facility, do they? Would you? So being able to be independent on your own means and not be a burden to anybody is of paramount importance. And some people think, I'd like to be able to make sure I can leave my home to the children, create a legacy for the family to be able to have years down the road after I'm gone. Do you agree these are pretty much most people think about when they enter retirement or they're in retirement that way? Key word here, though, is want. That's what we all want. Then we have to think about what the real concerns are. Well, losing your home. If you have a mortgage and your fixed income drops, or you've lost a significant portion of your portfolio and you're still making mortgage payments, and you're not able to make that mortgage payment, what's the potential to happen? What if you had to sell your home? How many people want to sell their home right now in this market? You don't. So that's a possible real concern. This is the #1 concern of seniors in America today. Outliving their money. Again, we talked about the people all living older and older and older. That is one of the biggest concerns, is outliving their money. We actually have stories of this one guy, it's a newspaper article, he outlived his life savings twice. He's 107, still going strong. Got kicked out of his home, couldn't afford it. Got kicked out of the nursing home, couldn't afford it. And they took up a big collection for him to be able to live. He's still 107 and going strong. He's outlived his savings, life savings, twice. So outliving your money to maintain the quality of life is something that's on a lot of people's minds. And again, the concern, they'd like to be able to leave a legacy to children. We're going to cover more about that in a little bit. And then not really wanting to be a burden to the children, but if there's no one else to take care of you, who will? Well, what if you don't have children? Or children nearby?
What was it like you?
Having proper health care is also very important. One of the things that happens to be the first items that people skip when they don't have money to maintain is proper health care. I feel good enough. I don't have to go to the doctor for that regular checkup. I don't have to go do this for that regular thing. They also start reducing the quality of food that they eat. Now, I've heard stories, and maybe you've heard it before too, about the seniors that were at the grocery store and buying cat food because they didn't even have a cat. You've heard the story. Proper nutrition is one of the things that starts to go out the window when income reduces. So expenses that increase on a fixed income. If you're at a Social Security check right now, you're set at that amount, especially for the next 3 years, right? What happened? The government's not going to give you the cost of living adjustment of 5% for the next 3 years. But yet, they gave themselves all raises and increase your Medicare contributions. How's that make you feel? So expenses, we know, just like taxes, always do what? So those are concerns. Well, what a lot of people are looking for in their golden years would be hopefully to be able to have a golden years. Go take a vacation, go do a cruise, visit the kids at Christmas, or fly the kids out to see you. Have a new car. That was my mom's big thing when she retired. She goes, I want a new Cadillac. I've always wanted one my whole life. She wanted a Cadillac. Not that she needed, she drives 10 miles a year, but it's just the fact of having a new car. She wanted a new car. Maybe someone want to buy a motorhome, see the world. They did that actually. They bought a motorhome and watched the leaves change all up and down the coast. It was great. Maybe remodel the house. You know what? You convert that room the kids are in into your sewing room or whatever the case may be that way. Or you want to do something to the house or move into a different house. Remodel the home. Maybe having a large enough cash reserve for unexpected expenses. Never know what they're going to be. But it always sometimes seems to be a little bit too much month left at the end of the money, isn't there? Or what? Well, there's a lot of different things. That's why they made different flavored lollipops. Everybody's needs, tastes, and desires and wants are different. What's yours? And how are you going to be able to afford that and fund that when you retire? Well, some people do find retirement a little difficult. You can't pick up the newspaper without seeing it, or news stories, right? What's the number one thing in the news right now? Healthcare. Okay? Reduced income to live on. Well, if CDs, which used to be the senior's favorite, used to pay 5-6%, now paying 1%. By the time you get a 1099, you're paying the bank to keep your money. Increasing medical costs. That happens year after year after year. Again, that's one of the big concerns right now. We happen to go on the privatized basis. Reduce Social Security benefits of the spouse. Now, this is one that a lot of people don't think about when they look for retirement planning, is that when the one spouse passes away, and they've both been on Social Security, so does one of these Social Security. The leftover spouse gets the higher of the two. Now, just because there's only one person, does that really mean the expenses have reduced by 50%?
No.
They have. Reduced pension plans. Look what happened to Delta, United. Look what they just tried to do to the big three. Automakers. Get rid of the pension programs. There's really not a pension plan out there anymore unless you work for the government, right? Increasing taxes on your home, that just keeps going up. Home repairs keep going up. And unexpected expenses that way. The new water heater, the new roof, there's some dry rot on the porch. We need to repaint the thing. We need to get siding, we need to do the gutters. All these unexpected expenses. Where's that money going to come from? Your own pocket. These are things that happen over time. Are we planned for them? Do we have money for it? It could cause, if you had to spend money on that, you might not have money for these other things. But they're all important. So typical ways to deal with it, well, let's put it on that credit card. Which, by the way, have you noticed that the minimum credit card rates are all going up to about 28%? Even if you had great credit? Is it just me, or do anybody else find it ironic that one of the biggest financial institutions who has credit cards just went bankrupt, Citibank? Cash out your retirement fund for those things. Or refinance or sell your home is another thing. And we're going to talk about that in a minute too, because that's the one thing people say, well, I'll just refinance my house, or I'll take an equity line out. Okay, let's talk about that in just a second here. So another option you may want to think about is a reverse mortgage. And here's a couple reasons why. First one is, it's a way that you can receive cash to pay off your home if you have a mortgage now and make no payments for the rest of your life. Now at some point it's going to have to be paid, it'll accrue that way, but it's not going to be something that you have to pay every single month, and I'm going to get into that a little bit more also. So, first thing, gee, I can pay off my mortgage and the house I've lived in for the last 12 years and I don't have to pay it back? That almost sounds too good to be true, doesn't it? Well, it's not. No monthly payments ever. There's no hidden fees or costs. This actually is one program the government has finally refined and got right. It's all overseen and administered by HUD. The insurance on the loan is administered and done by FHA. All the fees are completely disclosed. There's no backroom deals. There's no hidden broker fees and rebates and things like that. I appreciate the fact that people think, oh, well, how are you going to make on this? How are they going to make on that? What's the spread on that? You know, that's a lot of things that happened in the past in the subprime mortgages. That's how those people made a lot of money. All of these fees are up front, they're fully disclosed, and within $100 or so, all the different people that initiate the loans, it's the same fee structure. It's set by the government. So there's no hidden fees that way. But you know what? It might be able to give you peace of mind. All those things that were concerns before, this might give you the peace of mind that you don't have to worry about that. Because the mortgage would take care of that. The reverse mortgage would take care of that. And peace of mind, isn't peace of mind quality of life? Full sleep insurance, to know you don't have to worry about making that mortgage payment, or you're not going to have to worry about having enough money to live on. It's completely confidential. Other than the agent that helps enroll you in the program, no one has to know. So it's completely private as well. So there's a lot of programs. Well, it is true, like I said, thank you, federal government. They finally got one thing right by making something beneficial for America's seniors out there to help them be able to take care of themselves, to live off the equity of the home, gives them the opportunity to have a little better quality and dignity of life as well. Now, Lance, I hear a lot of the different stories about, oh, they're no good, so-and-so on the radio said this and that about it, they're not a good thing to have. Well, here's some of the top 12 myths. Number one, the bank or the government owns your home, or will end up owning it, and that's not true. If you have a mortgage now, the bank has a note on your home, right? It's the same thing. It's a mortgage. It's just that you're not making the monthly payments. If you choose to sell your home and want a smaller one or move to Arizona, you pay off the mortgage. Pay it off. Now, the bank gets paid off and you get the balance, right? Same thing with this. Even though you made no payments, sell the house, pay off the mortgage, you get what's left over. The home must be paid off to qualify. That's not true. This is one of the great things to allow people to have more monthly disposable income. If you've got a $1,200 a month mortgage and you're on a fixed income and your income starts to decrease, that $1,200 starts looking a little larger every month, doesn't it? Your home doesn't have to be paid off. If you're 62 and there's any equity in it, there's a real good chance you can pay off the mortgage. We'll cover that more in a little bit in detail. Reverse mortgage comes due, the bank sells your home. It doesn't come due. It comes due when you are no longer here, or when you choose to sell the home. Then it's due. It's due on sale. Not any time before. I take that back. There is a stipulation. If you live to 150, one day after your 150th birthday, they do call it due. So that's the one clause. So I guess that maybe is a true. But I don't think a lot of us really have to worry about that, do we? Is it cheaper to sell your home and move to a smaller house? Yeah, but why? This is the house you spent your quality of life and years in, didn't you? It's where you raised the kids. Maybe you want to say, no, I don't have a problem with that. I think that's a great idea if you want to downsize. Maybe a lot of people, their home had stairs and they want to go to a one level. Well, let's sell it, buy a small little house, but guess what? You can use a reverse mortgage to buy a home too. You only got to put down a little bit and the reverse mortgage pays for everything else. And you get the extra cash. And you still get the small house. Use up all your equity, you want something left to your kids. Okay, that's a good point. It may be equity in your home, but we can at least pay it off. And you're having the $1,200 or $1,300 a month that's coming out, you don't have to pay that anymore. That's going to improve your quality of life, isn't it? You know, each of you, when you were growing up, your parents, you weren't thinking about what am I going to get from mom and dad when they pass on, right? You want mom and dad to have quality of life. Well, ladies and gentlemen, your kids want the same thing. They want you to have a good quality of life. They want you to live and have food, take the trips, see the grandkids, and enjoy it. Don't worry about it. But here's the reality. Let me ask you, I talk to some people who say, well, I want to leave the house to the kids. That's really what I want to do. Right? So let me get this straight. You're 74. You pass on in 5 years, and your 4 kids and their family and their kids are all going to move into the house and live happily ever after. Is that right? What are they going to do? Sell it. Exactly right. And you don't get the benefit of seeing what happens to what they do with the money then. So why don't you enhance your life now, get your money now, improve your quality of life, or maybe help the grandkids now. Maybe use the money to take the trip you've always wanted, to buy the car, to buy the motorhome, to do what you want. It's your money. Reverse mortgage proceeds will be impacted with Social Security and Medicare benefits. Wrong answer. Has nothing to do with it. Just like if you take a second on your home right now, it's borrowed money, there's no tax on that money. It doesn't affect anything else that you have. Doesn't do it either. This is your money. Restrictions how you can use the money, that is true. They don't allow you to go visit Bernie Madoff and go after some 25% return kind of program out there. They don't allow you to put it in long-term deferral products because they want you to be able to use it for the benefit of your life now, not in the future. But help maybe lay the foundation. Yes, we can do that. Once the proceeds are received, the taxes have to be paid. No, that's not true at all either. And reverse mortgage is only for seniors in need. That's not true either. It's a very good planning tool. Now, we live in the state of California. If you are alone and you become sick or injured and you require some sort of long-term care, who pays for the long-term care? If you don't have long-term care insurance, and less than 10% of the people do, it comes out of your pocket, doesn't it? Okay? So you got to spend all your money to make sure you can take care of yourself, right? And when you run out of money, then what happens? The state steps in. And Medi-Cal steps in and takes care of you and pays the bills. Do they do it for free? No. They file a lien on your home for all the money that they pay on your behalf over the entire time you're there, with interest on top of it all. And the moment you go out like this, the home goes for sale, they get paid first, even if you own it free and clear, even if you have it in a trust, even if it was sold separate property in a divorce, it's yours. It's now the state's. And they will sell it under the Estate Recovery Act. So you may not be able to leave a legacy. Doesn't it make sense, maybe, if you can proactively qualify and take some of the money out now, pay off the mortgage, you get the bulk of the money now, make sure you take the grandkids where they want to go to Disneyland every year, or you go down and visit them, maybe take them to Europe, maybe help one of them go to school. You can see the benefit of where the money goes now. And then, should that ever happen, the state only gets this much instead of all of it. And you've had the benefit of a living benefit of your home, plus still live in it. Big out-of-pocket expenses. The expenses are all set by the government. That's the way it is. It's the same fee here, it's the same fee there, it's the same fee everything. There's a couple of fees, but they're already set by the government. We can't do anything about it that way. It's not something that's created. Reverse mortgage is similar to home equity loan. No, it's not. If you go to your credit union or your bank and you get a home equity loan, fill out the paperwork. Well, first off, you have to qualify, right? Credit-wise. You have to qualify income-wise. And then if you miss one of those monthly payments, what happens? Starts to report on your credit. You miss 2 or 3 or 4 more, guess what happens? You start getting some calls. You miss a couple of more, they're going to start filing some paperwork against you. So you got to pay it back on a home equity loan. A reverse mortgage, you don't. It's yours to live in until you pass or you sell the home. So, should you decide to do it, there's 4 ways you can receive the cash. You can get it in a lump sum and do with it as you wish, within reason, of course. You can set it up to become an income stream. How many people could use an extra $700, $800 a month right now? Most everybody could. So you can set up to receive an income stream that you'll never outlive, and anything left over goes to the family anyway. Or it can be set up as a credit line. You can just have it there as a lump sum of money that you can access as you wish. So it doesn't have to be accessed all at once. You can have it sit there in a pool of money so you can use it for as your needs, for medical expenses, for trips, for whatever purposes you want, or any combination. You can do some in a monthly income, you can do some in an equity line, you can do some in a lump sum and put it into other types of things. So it's your money, you can do as you wish, and there's no tax on it. So the circumstances may change, and you can juggle it however you want as well. Now, a real life scenario is, let's say a person's home's worth $290,000. They've got an existing mortgage, and they're making monthly payments on it of like only $500. Through other savings and retirement money, they've got $150,000 in there. Now, the spouse passes away, and the remaining spouse loses part of the Social Security that we had, right? Remember we covered that a little bit ago? Okay. So the income of the other spouse, the investment income off the $150, now they still have that mortgage, she's left with $1,287, which is $15,400 a year. Let's see what a reverse mortgage might do in this real world example. Well, we pay off the mortgage and we eliminate the $500 a month. The monthly income now raises $500 a month because she's not paying it out, right? Okay. The reverse mortgage income, well, she wanted to do part of it to be able to create a monthly flow to increase her cash flow. So now she's getting another $1,090 a month every month for the rest of her life. And on top of that, her income has now gone up, and she had money to go be able to buy that new car she wanted. And guess what? You're not using all of the equity in the home. You're only using a portion of it. So there still is a potential for leaving a legacy. So we've increased her income almost $20,000. We've been able to reduce the amount of money she has going out and improve her quality of life and help her get a new car. Not a bad little plan. So the power of reverse mortgage is you can dramatically increase your income, you can eliminate mortgage payments, you can preserve, add to your nest egg. How many people you know have lost money in the market lately? If you're one of them, well, this may be a way you can recoup some of that. Make sure that nest egg's going to be there, so your nest egg isn't cracked or scrambled. Reverse mortgage can help replace the income from Social Security lost by the spouse or lost by a pension. Now, a lot of times when I meet with seniors, they don't remember or don't understand that if he had an older pension program from his work, that when he passes away, unless he checked the right option, it may all go away, or she's only going to get 50% of that. So this is a great way to be able to replace some of the lost income, either from the loss of a pension, loss of spouse, or loss of Social Security. You can live your golden years under your terms, not what's dictated to you by the amount of cash left over. It can be a very valuable tool that way. No monthly payments ever, as long as you live, as long as you occupy the home. We'll cover some of that as well. How much can you receive? Well, it really depends on the age of the youngest borrower. So if I have a husband and wife, and he's 72 and she's 64, it's based upon her age, how much they can have. So in that case, they'd be able to receive, based on her age, approximately, give or take, 50 to 55% of the appraised value. So that means what? There's 45 to 50% equity still left in the home. It's based on the value of the home and the maximum loan amount you're able to receive. It doesn't mean what you have to qualify income-wise, credit-wise, job-wise. That's nothing to do with it. If you own the home, you're over 62, you got a pulse, qualify. It does pay off the existing mortgages and liens that way. What you can do with the money? Well, anything. You can pay medical bills. You can buy a second home, buy the car. I've had people want to go out and buy a motor home and travel the world. I've had people have the home paid off completely, a large home, and they're able to redo the reverse mortgage, make no payments, take the proceeds and buy a beach house somewhere and pay cash for that. So now they own 2 homes free and clear, no payments, and have the vacations they want whenever they want. Have people want to remodel their kitchen to become the dream kitchen with the total granite, the total cooking utensils, whatever you want to do. It's your home, it's your money. Do with it as you wish that way. But for the necessities, paying your taxes and insurance, that's the only thing you have to pay. You do not pay the mortgage, but you do have to pay the property tax, and you do have to pay the homeowner's insurance. But you can use it to pay for in-home health care. As I said, most people want to live under their own terms in their own home instead of going to a nursing home, right? Isn't that pretty much everybody else's goal as well? Now you have money to be able to pay for in-home care. Travel. Go where you want. Have fun. And go back, take the kids with you. It's found money. Maintain a standard of living that maybe you always wanted when you used to work, you had a good income, or heck, create a better one. If you've increased your income $20,000 a year with no outgo, kind of increasing it, aren't you? So, if nothing else, you'd be able to have a pool of cash for an emergency that does happen to come up in the future. It's your money, use it the way you see fit. Distributions are tax-free. It does not affect income tax, it does not affect Social Security, it doesn't affect Medicare. Now, as I said earlier, you do pay off your other mortgage, and they do have to pay those off. So you have to have enough equity to be able to qualify to pay off those mortgages. And even if you didn't, I've had people that over time, the home values have decreased now, and they've had to take out seconds to be able to help make ends meet in certain areas or help the kids with this and that. I've had people actually have to come into closings with as much as $10,000, $15,000 to be able to make the loan happen. But if they're paying $2,000 a month on a mortgage, it doesn't take long to be able to pull the money from one area to help satisfy the mortgage and never make another payment, does it? The payback's pretty easy on that. So say goodbye to the old mortgage and debts. Again, if you can answer yes to the following, are you 62 and older and have a pulse? Okay. Do you own your own home and you're going to live there? Because they say, well, I have to travel a lot. I want to go visit the kids or I have a vacation home. Great. As long as it's your primary residence and you don't rent it out for gain and you're there at least 6 months a year, you qualify. And we have to be a U.S. citizen or a legal resident too also. It does not affect the trust. There's no credit approval, no income requirements, and no out-of-pocket expenses except an appraisal by an FHA certified appraiser. So what does it really cost, a reverse mortgage? Well, we don't charge any application fees at all, ever. There are certain fees, but again, they're set by the government and they are rolled into the loan for you. So you don't have to write a check for anything except your appraiser. Closing costs are all figured into it. They're virtually the same as what you have in a regular home equity line or mortgage. You're going to have title and escrow and some of those kinds of fees. But other than that, there's no special fees. There's no special reverse mortgage fees. And they are subject to, of course, federal guidelines, rules, and regulations. And no upfront fees are ever charged by us to help you see if you qualify for the home. So, but Lance, I heard though that, if I die, I want to make sure my spouse can stay in the home. They can do that. As long as both parties are on the title, the surviving spouse gets to live there for the rest of their life as well. Now, if you have a mortgage on your house now, and you meet a cement truck on the way home, and the estate has to settle the property, what happens to the house right away? Is the bank going to sit around and wait for you to, or your family to decide what to do? They want their money. With the reverse mortgage, there's an automatic 6-month window that the heirs have to be able to decide what they're going to do with the home. Maybe one of the children does want to buy the home and move into it. And there's also one-time 6-month extension. So literally 12 months for your family to decide what they want to do with the home on your passing. Is the bank going to do that? As I said before, oftentimes up to 50% or more of the home is going to be still available to you on an equity basis. Now, even though home values have dropped, if you've had your home for a while, is it still worth a little more than you paid for it? Most cases, yes. I hear seniors talk about the fact they paid $28,000 for this house back in 1958. What's it worth here now? Even in a down market, $600,000-$700,000, right? Okay? So, can we agree that at least over time, markets are cyclical enough that we know they're going to do this? Remember the 90s? And then what happened? It went, ooh, and then it's down a little bit, and now it's going to go back up. So, even though you have a mortgage for 40, 50, 60% of the value of the home's still going to continue to increase, and that's your equity. That's part of the legacy you can pass on to the children. Or, if 10 years down the road, you're what? 10 years older, and you need more money, you can do another reverse mortgage and get the rest of the equity out. Also, this is key. It's a non-recourse loan, which means, should the exact opposite happen, let's say we have this, total economic collapse, and your mortgage amount is more than what the home's worth, and you pass on. A lot of places are going to require the estate to make up the difference. Come back to the kids. Reverse mortgage, One of the fees that gets paid in the origination at the beginning, but they say the high fees, because they call it MIP. And that MIP is what guarantees the lender that if the home goes like this and the loan is like this, the government picks it up. The estate does not have to make up the difference. So there'll never be recourse after your estate. Again, if you're there at least 6 months out of the year and you pay your taxes, that home is yours for as long as you want to live there. How safe is it? Well, it's federally insured from A to Z. Covers everything. It's all closely regulated by FHA and HUD. They're endorsed by HUD and AARP because the new plans have become very, very senior friendly. And as a specialist, we are subject to very strict guidelines to making sure that everything is processed correctly and disclosed correctly to our borrowers. Hundreds of thousands of people nationwide are taking advantage of it. As I said at the beginning of my little talk, was our focus and goal is to work with people to take advantage of the laws the way they're written for the benefit of our clients, not the expense. This is a benefit. This is a tool to use to help recoup retirement planning. This is a tool you might be proactive in making sure that your long-term medical care needs are met. A tool you might be able to use to make sure you're going to have money set aside for a legacy. A tool you can use to recoup losses you may have had in the market or to your nest egg. A tool you can use to be proactive to keep the government from taking your home should you need long-term care and it's set up correctly. Help you use the right tools to get the job done. If you're at all interested, please don't put it off because procrastination can cost time and money. Because we don't know, at least my crystal ball is broken, how's yours? Values of the homes may go like this. Interest rates may go up or down, which can affect the amount you receive. It only takes about 30 to 45 days from the moment you say, this is for me, let's go. Within 45 days, you can have a check. Or not have to make a mortgage payment anymore. If the interest rates go up, you're going to receive less money. So if interest rates are all due to start rising for consumer lending, it makes sense to see if you qualify now. Your home may drop in value, you could receive less money, or the plan is actually going to change. It changed already October 1st. I had people that started the process with me in September, and they were going, yeah, I just really want to think about this for a little while and see if this is going to work for us or not, and want to talk to some people about that. Get a call on October 10th. Yeah, you know what, Lance, that sounds great. Let's go forward. Then I go, Norm, can't do it. You're going to have to come into cash with closing now. They changed the requirements. They took 10% of the amount you're able to get away from you on October 1st. Now, Norm has to come in with $8,000 to close his loan, where before he's going to get about $18,000. And guess what? Remember the video earlier with all the numbers, the 1.8 trillion, the 5.9, and 65? That's all part of the big stimulus package. Where's the money going to come from to pay that?
Taxes.
All of us. So one of the things they're going to do is look at ways to stop spending some money, and this is one of the areas they may turn off. But once you're in it, you're in it. But the plan is scheduled to change after the first of the year. Don't know what it's going to be. Let's see if you qualify. We suggest you at least look and see if we can qualify based upon approximate values and what it would look like for you. If you have any questions, ladies and gentlemen, please write them down on your form. We'll be here for a little while to chat with you. I want to thank you for taking the time to come in here and educate yourself on this. I think it's a very important topic. I think it's a very timely topic. Even if you particularly may not need the information or don't feel it's for you, you might know somebody that it is for. And we'd love to have the opportunity to help them take advantage of this tool. Thank you.